I mean, if it was a stock and it went up by a factor of 10, then you're valuing it versus the underlying cash flows, and you're thinking that the P to E ratio is blowing out, is becoming very risky. But it's not a stock. A stock is a reflection of the outlook of the cash flows of another unrelated product in a fiat currency system. Bitcoin is pure monetary energy. As the price goes up, the monetary force related to Bitcoin goes up. The attraction that that monetary force has, like a gravitational force to money, goes up. So if you want to understand where Bitcoin is going, you look at the entire worldwide monetary system, and it looks like there's $200 to $300 trillion worth of money that's looking for a store of value. You know, if I wanted to take $1 billion of Tesla stock and wire it to a private wallet in sub-Saharan Africa, my bank wouldn't let me. That doesn't keep me from buying Tesla stock, right? If I wanted to take $100 million worth of farmland in the middle of the United States and wire it to a private wallet somewhere in Asia, that doesn't, you know, the government wouldn't let me. I can't physically do it. It doesn't keep me from buying farmland as an inflation hedge. People are going to buy Bitcoin because it is great property in cyberspace as a monetary inflation hedge. If you actually put regulations on it that are anti-money laundering regulations, or you put regulations that have to do with know your customer to prevent using it to finance any illicit activity, it's not going to undermine its value as property, because it's the most pristine, highest quality property in the 21st century. People are going to buy it. There are going to be regulations that'll vary from country to country, and I think it'll be just fine. Well, I think that gold served as a store of value because it was hard to produce, and every wealthy person on the planet agreed that gold was the principal fundamental money, right? The gold standard, if you will. 5,000 years of the gold standard, it makes sense. All these things make sense until humanity invents something or engineers something better. Horses, wooden ships, swords, bows and arrows, brick walls, roads, they all made sense until we had airplanes and electricity and modern technology and telephones and the like. So, you know, Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, then and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months, and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, well, you know, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Well, because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The government, the governor, the mayor can impair the asset. The laws of physics impair the asset. I can't wiggle my nose and move the gold 1,000,000 times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, 30 years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts. I felt like in 2020, after March, it became a fairly easy decision. The entire world had a problem of monetary expansion. If you're an engineer, you look for a technology solution to a problem. There are a lot of non-technology solutions to monetary expansion. I mean, gold is a 5,000-year-old non-technology solution. And now Bitcoin is the technology solution. I had 10 years of experience. I could look back on what all the Bitcoiners have done for a decade. And I just had to make a guess, which is the rest of the world going to be rational and look for a technology solution to their problem? And I don't think it's an irrational thing to bet on technology in the modern era. So that's what Bitcoin is. I think what's driving the Bitcoin market is institutions. And institutions are bringing billions and billions of dollars to Bitcoin because they want to store a value against monetary inflation. Everybody's buying this Bitcoin on regulated exchanges. They're storing it with regulated custodians, and they're doing it subject to AML, KYC regulations that have been in place for a long, long time. There's not anybody that's buying Bitcoin right now that isn't expecting to do it on a regulated exchange subject to normal regulations. And the fact that AML, KYC regulations apply to bonds, Apple stock, Tesla stock, and other types of assets hasn't kept them from having value. So I think the summary here is we're going to find conventional AML, KYC regulations applied in Europe and the United States. And everyone that's buying Bitcoin and holding Bitcoin as a monetary inflation hedge is going to find that to be acceptable. And this is much ado about nothing. First of all, I think that the massive corrections are becoming less massive year by year, quarter by quarter, month by month. The market in Bitcoin is stabilizing as more institutions come into it. And I think we can see it over the past 12 months. Second, I think that everything that's living on this earth is volatile, and things that are dead are not volatile. And so I would much rather have a volatile 300% return than a non-volatile 15% return, or a lesser return. And there's least volatility in cash with a 0% return. So stability is stagnation, volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility. It's like a Jedi mind trick to convince you should be afraid of volatility. If volatility is going to return 200% pre-tax every year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. That's like, you can't raise your children in a bubble and tell them they should not. I mean, if they stay in their basement and they never leave the house and you surround them with the bubble, how are they going to grow and live and prosper? People saw in 2020 that gold wasn't working as a monetary inflation hedge, and Bitcoin is, and they didn't understand the technology. You're going to see people selling their gold and buying Bitcoin. You've got a arbitrage difference, 300% on Bitcoin, 15% on gold. How long are people going to allow the differential interest rate? One currency yields 15% interest. The other currency yields 300% interest. And the only thing anybody has negative to say about it is it's new and it's going up, 10 times faster in a volatile fashion. At some point, people are going to be shorting gold, buying Bitcoin, and it's going to accelerate. The most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance that is engineered specifically for that purpose. that dozens of billion-dollar entities are embracing for that purpose right now. As the generation that bought gold learns about Bitcoin, and as generational wealth moves to the technologist, I think the Bitcoin is the digital gold. Look, I've got a phrase, diversification is selling the winners to buy the losers. So what portion of your tech portfolio would you invest in Amazon versus the retailers that that aren't Amazon, right? It seems like you would have lost on 15,000 retailers, made money on Amazon, and maybe broke even or made a little bit on Walmart. And what portion of your portfolio would you invest in non-Apple stock in the mobile space? And what would you invest in the other search engines instead of Google? And what would you invest in the other social networks instead of Facebook? The diversification away from the winner is diversification to the losers. So take half your portfolio, invest it in gold and get 15%, and the other half invest in Bitcoin and get 300%, and then do that 10 years running, and you'll pretty much destroy half your money. Like, you'll lose half your wealth.
Bitcoinator asks, does MicroStrategy have a plan B in case Bitcoin drops a lot? Something that I really doubt. Or are they hodling no matter what?
I'm a rational actor, and so I consider what's going on in the world at all times. My view of Bitcoin is it is the highest quality property or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation, with inflation rates of 15% or more expected for the next 5 years. It's easy. If the monetary inflation rate was 0, it would be difficult, and I would have to evaluate the differential coupons, rents, and dividend yields of all those other assets because they're fiat derivatives. And if no one could mine any more gold ever again, and if it wasn't centralized, I would have to consider that. If something changes, and if some other superior technology comes along, we'll figure it out. But right now, I don't see anything superior. So my view is that every time you sell Bitcoin, you're buying an inferior asset. And so you're selling a winner to buy a loser. And given the likely differential rate of price appreciation over the next decade, it would be seriously wealth destroying to diversify out of it. Deploy the telephone, the telegraph, the mobile phone, television. None of these are a bubble, right? And in this particular case, Bitcoin is a monetary network. They simply don't understand that it's a monetary network. Once they understand, and maybe they'll never understand it. There are plenty of people that made fun of Henry Ford. What is this with standardized automobiles? John D. Rockefeller had Standard Oil. He standardized oil. Was that a bubble? General Electric, general electricity to your home to power up your appliances. Is that a bubble? Right? General Motors. That's everybody is a standard motor. We're replacing the horse and buggy. Is it a bubble? And the answer is no, it's not a bubble. It's an engineering breakthrough. And eventually everybody in every company on earth is going to be wired into a monetary network because it's thermodynamically sound and it solves a problem that everybody has. Once they realize it solves the problem, and maybe they won't ever. There are people that don't have electricity in their houses. They thought, there are demons that were going to invade their kitchen with the thing. And I suppose you find people that get shocked by electricity and they're still afraid of it and they never gave up their horses. But no, it's not a bubble, it's technology. How long did people object to noisy automobiles, and how long were they afraid of electricity, and how long were they afraid of elevators and tall buildings? I mean, there are people that didn't want to get in elevators for a while. I suppose probably it's a decade. Like, it takes a decade for people to adjust to these things. And, you can't really go much faster than we're going. Bitcoin is appreciating at 200% a year for 12 years. It's appreciating at 300% this year. I kind of find it hard to, how many big tech networks grew at 100% per year for a decade running? Like, this is a big tech monetary network that is expanding in excess of 200% a year. So you can't really ask it to expand any faster. I think that for the next decade, we're just going to see the expansion of a digital monetary network that is Bitcoin, and people are going to probably resist it and fear it more as it grows, because when no one notices it and cares about it, they don't have an opinion. But when people come into your neighborhood and they start wiring their house for electricity, you start complaining about all the ditches they're digging and all the obstructions in the road and all the power lines. And then you're worried about the power lines giving you cancer. And then you hear about someone getting electrocuted, and then someone drives a noisy automobile down the street and the kids are playing in the street and you worry about it. There's going to be a lot of pushback, I suppose, and it'll be natural, but it's not going to change the inevitable, which is the world needs a digital monetary network. It's a $400 trillion problem. It's an idea whose time has come. You're not going to be able to stop it.